What's going on, guys? Mr. Zink here. In today's video, we're going to review the past 2 days of price action using the London 50. We're going to talk about entries, exits, stop losses, take profits, and all the questions that you guys had in the comments of my last video. Let's get right into it. Before we get started, I want to make sure everyone's looking at the same chart. I use QQQ on TradingView. I do not chart NQ or MNQ. I use QQQ with extended trading hours on. To get extended trading hours, go to the cog icon on the bottom right, highlight session, and go over to make sure there's a check mark next to extended trading hours. To get your London 50, it is any high or low made between the 4 a.m. candle and the 9:15 a.m. candle. In this case, our low was made at 5 a.m. and our high was made at 8:15. Drag that out to the right. That is your London 50 for that trading session. Make sure that you have the weak magnet on to make a snap to those levels. To get your previous day's 50, it is any high or low made between 4 a.m. and 8 p.m. In this case, we're using Thursday's price action. Thursday was a half day, so the close was at 4:45. The open was still at 4 a.m. Our low was made at 6:15, and our high was made at 11:30. Drag that out to the right. That is our previous day's 50, otherwise known as equilibrium by T-Trades. I'm going to delete London 50 just so we can highlight what the previous 50 does for us. The previous day's 50 gives us our bias for the day. If price is below the 50, we're bearish. If price is above the 50, we're bullish. In this case, since price opened below the 50, and by open I mean any candle after 9:30 or 9:15, price opened and stayed below the 50, we are bearish for the day. We are only taking shorts. If price is above the 50, we are bullish for the day. We are only taking longs. Now let's get that London 50 redrawn. Again, the low was made at 5 a.m. The high was made at 8:15 a.m. Drag that out to the right. There's our London 50 for that session. Now that we know that we're bearish, we're looking for short setups, or we're looking for price to reject at the London 50. Just looking at price right now, we would have had 1, 2, 3, 4, 5, 6 entry models at the 50. And then remember, we can also take entries below London low or above London high. In this case, we're looking for shorts below London low. We had a close below London low at 10:45, and then price immediately reversed. This would be a stop out. Simple as that. That's going to happen with this strategy. Nothing's going to be 100%, but these 6 wins should outweigh that. Again, we had 6 entries. I'm actually going to highlight it with the rectangle right there, all the way to the 12:30 entry. 6 beautiful entries, all of which would have yielded probably about 20 points, 30 points. And I don't chart this over on MNQ or NQ or whatever platform I'm trading on. As you can see, there's nothing on here but the psych levels, 22,900, 23,000, 22,800. I did remove. I only have psych levels every 100 points charted on M and Q. That's it. I use QQQ to chart. I watch QQQ as I'm in the trade. My stop loss, and this is another common question from last video, is a 15-minute closure above or below the level. So let's go into replay mode and review this entry from London low. London low, we close below it. What I'm looking for is a retest up to the level, which we did get on the following candle. As soon as that London low hits, I'm entering short. That is, let's review this. So that's the 10:45 candle. We're looking at the 10:45 candle. There we go, right there. That is my entry model. I go over to TradingView, I enter the trade, I go back on QQQ's chart and just watch it. My stop loss, since I entered shorts on a close below 552.63, my stop loss is any candle that comes up and closes back over that level. My take profit, really wherever you want to put it. $50 profit, $100 profit, $30 profit, $5 profit, whatever tickles your fancy. Let's take a look at the next candle. That is my stop loss right there. So this candle closed over the level that I took. I took shorts at 552.63. This candle closed at 552.94. That's about a 30-cent loss on Qs. If we correlate that over to NQ, MNQ, that is a stop loss of about 16 points. Not really all that bad for a risk, is it? Now let's review up to the next London 50 tap. Let's see how long it takes for price to get up there. There we go. London 50 got hit. Let me go back to that previous bar. As soon as price hits London 50, that's your entry for shorts. You're taking 2 MNQ right there. That's your entry for 2 MNQ. Your stop loss is any candle that goes over that line. Any candle that closes over that line is your stop loss. So if the next candle comes up and closes like this, you're out of the trade. Now let's review what happened on the next candle. And this is one of my favorite trades that I've taken using this strategy. Granted, I did get lucky with Trump talking about tariffs. Look at the drop that we had on that candle. Now the wick doesn't do it justice. The body of the candle was down here at one point. This was a 150 point short in 2 minutes. And over on TradingView, Top Step, which is what I trade on, the candle closed at negative 55 points, but from high to low, this was a 150 point drop that happened in less than 5 minutes. Absolutely beautiful trade. Secure it wherever you want to on the trade. You don't need to let it run to London low, previous day's low. If you see 50 bucks up here at 553.16, secure it. If you see 100, secure it. If you see 150, 200, 300, wherever you want to take profit with this strategy, all it does for you is gives you an entry model. Now, if you're worried about risk reward, if you're worried about take profits and stop losses, this is probably not going to be the strategy for you. If you are more concerned with profitable trading, securing consistent wins, and just overall success with trading, this is your trading strategy right here. So again, our entry was as soon as price went and tapped 553.81, which is where London 50 is. We have a bearish bias on the day because the previous day's 50 is above where price is currently trading. We are not taking any longs unless price gets back over that 50. Stayed below it all day. We are bearish for the entire day. Shorts, beautiful 150 point drop. 1 MNQ, 300 bucks, 2 MNQ, $600. I didn't hold it the entire way. I probably secured it for 150 bucks, 160 if I'm not mistaken. And then we just go along with our business. What did price do? Hit the London low. We can take a short at London low, and then as soon as price closes either over or under that level, under it, since we're in shorts, we have further confirmation to stay in those shorts. Over that level, we're stopped out. Again, for the stop loss, it is any 15-minute candle that comes up and closes over the level that you're taking those shorts or longs. If the candle had come up and closed like that, as such, that's probably another 16-point stop loss, $32 per MNQ. Not all that bad considering we just caught a 150-point drop. Let's see how price proceeded after our entry model hit at London low. We had a beautiful 100-point continuation to the downside. Little reversal back up. Hit London low again, so you could have entered again if you had secured on that 1245 candle. Hit it again, so you could have had another entry on that candle. And then price just continued down for the rest of the day. I'll exit this. There you go. Price ended up continuing all the way down, closed below previous day's low, wicked all the way back up. You're always waiting for the retest. You're not entering on these large moves outside of the range. You're always looking for a retest. The reason being, it minimizes how much you're going to risk on the trade. It minimizes the loss that you're going to take if the candle does happen to close over or under the level that you're taking. That is how we would have traded Monday. That is how we traded Monday, actually. And then reviewing price to the next day. So we do the same exact strategy. We go ahead and clear our London 50, draw out previous day's high to previous day's low, drag it to the right. That gives us our previous day's 50 equilibrium. Our bias going into today, price opened over previous day's 50, and then just kind of ping-ponged over, under, over, under, over, under. This is pretty rough trading day, to say the least. Drag our London 50 in. London 50 high was made at 4 a.m. Low was made at 6 a.m. Drag it out to the right. There's our London 50 for today. We had one entry model that came in at 10:30. This was another tweet from Trump that happened earlier this morning. One entry model at 10:30, shorts, 2M and Q, followed by about an 80-point drop. Again, in 2 minutes, because Trump had to open his mouth about tariffs. It is what it is. And then from there, we just kind of ping-ponged over under the previous day's 50. Not really any trading that you can do with this. And that's okay. There are going to be days that trading's rough. There are going to be days like yesterday where it is just as perfect as it gets. You hit the 50, you reject 150 points in 2 minutes, and then you proceed lower with previous day's 50 giving you your bias. You're not going to force trades with this. What you're going to do is you're going to take trades. I usually stop at 11 o'clock, and then sometimes I look to see how price reacts. But if you're happy with your profits early in the day, you're better off getting out of there, closing the charts, locking out for the day, waiting for the 50 or the London 50 to form for the following day, trade that, and go on with your business. That is a review for price action for these past 2 days. Your entry model is as soon as price hits it on the 15-minute time frame. As soon as the wick hits either London low, London 50, London high, previous day's 50, previous day's high, previous day's low, as soon as price hits it, that's your entry. Your stop loss is a 15-minute closure over or under the level that you're taking, depending if you're long or short. Your take profit, wherever the hell you want it. If you're up $20, secure it. If you're up $50, go ahead, take it. $100, go ahead. If you want to stretch it out, try to make $200, move your stop loss to break even, let that trade run. I like to secure my trades for $50 to $60 profit. Sometimes I take $20 to $30 profit. This is a repetitive trading model where you're going to have a lot of entries with a lot of scalps. They're successful. It sits at about an 80% win rate, 78 to 80% in that range. Some days are good, some days are bad. It all evens out in the long run. I hope you enjoyed that review. Any other questions that you guys have, drop them in the comments. I'll try to answer them on every video that I have from here on out. I'll try to get a response out, reply to those questions. Drop a like, subscribe to the channel. Let me know what you want to see for the next video. See you guys later. Peace out.